Hi, in this video we're going to talk about Zilliqa with ticker symbol ZIL. And the reason why we talk about this coin is because recently it was shooting up quite a bit. We are looking at 18% performance in the last 24 hours, while trading volume went up more than 200%. What's currently going on with Zilliqa? Why is it pumping so hard? For context, the coin is, in terms of market cap, at rank 69. So we've got roughly $1 billion of market cap. And the question is, does it make sense to buy Zilliqa right now, to keep holding it or to start buying more? And in order to answer this question, we will not only look at the Zilliqa to US dollar chart, we will also look at relative performance with respect to Ethereum. So how much better or worse is Zilliqa doing in comparison to Ethereum? A lot of people, they only look at the altcoin valuation with respect to Bitcoin, but I personally think that the relative performance to Ethereum is way more important. And so let's jump in. So you're probably familiar with this chart. This is just the Zilliqa to US dollar chart. And what I like to do is I check how is trading volume developing recently. And the reason why this is important is because when trading volumes are very high on a coin, when trading volume jumps, that typically means that there is currently a lot of attention on the token. And so with that increased attention, usually also price increases. So for example, when we look just over here in April 2019, we got a spike in trading volume, and at the same time, the price of Zilliqa increased. And the problem with price increases due to heightened attention is that attention is not something that's stable, right? It goes from coin to coin. So it's fleeting. And with that, the price might also fall afterwards. So if we look at this example again, we got several positive weeks, while at the same time trading volume increased. The price went up 70%, but once nobody was interested in the coin anymore, traders sold again and the price fell. And you can see this correlation between trading volume and price very often in altcoins. You can even see this on a larger scale. So when we zoom out and when we look at, say, the top over here in May 2018, let's look at, relatively speaking, how many people have actually Googled for Zilliqa. So how much attention did we have on the coin? So this is simply Google Trends, search term Zilliqa worldwide, last 5 years. And when we look at this spike over here, in search term interest, we can see that Zilliqa has been searched quite a lot around middle of May 2018. The exact same time when the price here spiked. So general interest seems to be really clearly the driver of those price movements for smaller coins. So now the question is, can you maybe time your buyings with this strategy? So could you maybe just buy once the attention is very low? So let's say here in August 2018, and then sell once attention gets high again. So let's say in June 2020. And the answer is you can kind of do this, but not really. So this is August 2018. This is June 2020. And we didn't really gain or lose much during this period. So when you bought over here and you sold over here. But what you got in the meantime is a drawdown of more than 90%. So you don't want to have that. So it's dangerous to buy a coin just based on it not being hyped right now. It looks like smaller altcoins, they tend to decline during periods when there is no attention. So the prices are not stable during this time, the prices decline. Or in other words, just the fact that currently search volumes are relatively low doesn't justify that the price is going to stabilize and that this is a buying opportunity. It's very much possible that we just get again a prolonged period of little interest and with it declining prices. One thing I like to do with altcoins is to try to find a moving average that best suits the asset's volatility and the asset's trends. So basically trying to find a moving average with the perfect duration so that we can properly determine buying and selling signals. So what you see over here is the 60-day moving average in white. And the idea of trading with moving averages is that you are always in the market whenever the price is above the moving average, and you're outside of the market whenever the price is below the moving average. Or in other words, you want to avoid those large downtrends, and you want to be in the market whenever the price tends to go up. But the only problem are those bad trading signals, right? Like over here. We always buy and sell and buy and sell. And during this process, we incur a lot of trading fees, slippage, gas fees, bid-ask spread, a lot of costs, so we don't want to have those trades. So what we can do now is we can try to adjust this moving average or the duration of this moving average in a way that going forward, we hopefully get suitable buying and selling signals for this asset. So let's increase the duration over here. And now we are at around 130. Still, we've got the bad signals over here. So we're gonna go longer in duration. Now we are looking at the 200 moving average. That's already quite good. We don't have these bad trading signals over here. We do have, however, this signal over here that we could average out further. So let's increase the duration a bit more. And now once we approach the 300 mark, say we go to 315. Now we don't have this signal over here anymore. We also don't have this bad signal over here. And I think this represents the asset quite well. So we wouldn't have been in the market theoretically during this whole downturn. We would have entered at around 0.7 cents. And then we would have recently exited after an approximately 12x. And so just by looking at this chart, we can basically see that historically speaking, we do have a pretty bad situation right now. We basically break this moving average that historically was a pretty good indication for if prices are long-term falling or rising. So this moving average didn't make any bad signals, at least in the past. So in other words, I would watch this moving average quite closely going forward, the 350-day moving average. I wouldn't be surprised at all if this moving average now tends to become a resistance here. I mean, this recent pump, it was quite impressive, right? Like 40, almost 50%. But we can even see that when we just look at the intraday trading range, that exactly at this moving average we bounced off. So yeah, just look at this moving average. I personally think this is pretty dangerous. If you're currently holding Zilliqa and you're heavily invested, it might make sense to take a few chips off the table simply because this here doesn't look pretty at all. Now let's look at the Zilliqa in Ethereum chart. So the Zilliqa price divided by the Ethereum price. So that's the chart you get. What I find interesting over here is especially the performance since the beginning of the year. And why the beginning of the year? That's because of Bitcoin dominance. This chart over here shows how much percent of the overall crypto market cap is in Bitcoin. So in other words, in the early days, almost the entire crypto market was Bitcoin. Then we had a big ICO rally in 2017. Then came the big crash, and with it, Bitcoin recovered. And if you look at the Bitcoin dominance, since when is it falling again? Since when are altcoins pumping again? It's exactly since the beginning of the year. So the Bitcoin dominance fell from 70% all the way down to 46%. Bitcoin is now much less important as a fraction of overall crypto. A lot of people are buying altcoins, and thus when we look at altcoins, we should expect quite a rally in this time frame. The average altcoin did very well since the beginning of the year. And so let's look how Ziliqa performed since January 2021. So in US dollar terms, Ziliqa did very well since the beginning of the year. We are looking at a 17x or in the peak even at a 50x. But how does this compare to Ethereum? Since the beginning of the year, Ziliqa was once 3x more performant than Ethereum, but now it's basically on par. We are looking at a 20% outperformance, but obviously with a lot of volatility in between. So that's not too good. Why? Because Ziliqa is small, right? It has a market dominance of 0.07%. It's a much more risky coin than Ethereum. And so with that increased risk, with that lower market cap, you want that in positive times during an altcoin season, that your small risky coin performs more, right? You take on more risk, you want more performance. But that only happened temporarily when attention was high, when trading volume was high. But that wasn't sustainable at all. If you look at other altcoins, for example Cardano, you are looking at an outperformance of 170% versus Ethereum with much less volatility. And that's exactly what you want to have. You have a riskier coin and you get rewarded for that risk. At least you get rewarded whenever there's an altcoin rally. So when Bitcoin dominance is dropping. But you don't see this in Ziliqa. Relative performance to Ethereum is not impressive at all. Now you might argue there were these temporary pumps where you could still make 200%. And you might argue, okay, there's something like a trading range of a top over here, a floor somewhere around here. So maybe we could just shoot up again. But I think that's a pretty risky bet to make. Historically, the July, August, September, they are not the best months for crypto. So this is an analysis of the Bitcoin performance by month of the year. There's a separate video on this on my channel as well. And so this chart includes more than 10 years of price history. And so usually we're looking at a positive fourth quarter in crypto and at a positive spring. But the autumn typically is relatively weak. And so when you're buying right now, I wouldn't be surprised if we actually see the price to relatively fall again, right? We still have easily a 40% drop, relatively speaking, versus Ethereum. So I would be cautious right now. The moving averages look pretty bad. The outperformance to Ethereum during this altcoin rally wasn't too great. We still have room to fall, and typically we do fall during the autumn months. And so if you ask me, for my opinion, no financial advice of course, I would probably hold off. I wouldn't buy Zilliqa right now. I don't think that the current risk to reward looks too great. I think this is a pretty dangerous spot where Zilliqa is in right now. If you want to help this channel grow, please give this video a thumbs up. Feel free to subscribe in case you haven't yet. And last but not least, we've also got a Telegram channel. It's spam free. It's a small group of people discussing crypto, so feel free to join there as well. See you next time. Bye bye.